Now, the latest push by Chinese firms to avoid US delisting falls short. So how short was it? I know, many of you have been following this delisting drama like clockwork. Truth be told, I really cannot be bothered. And that's probably why you have seen so little updates on my side around this delisting topic. Of course, there have been many different speculations around what might or might not happen after this whole shenanigans that is going on. Funny thing, I'm actually quite impressed by investors who are still holding on to these Chinese stocks until today if they are unwilling to convert to the Hong Kong counterparts. I'm sure many of those said investors are kinda just trying to speculate a jump in price once maybe the SEC puts many of these delisting concerns at bay. But who knows what other tricks the SEC have up their sleeves. If you believe that there are additional motivations behind this delisting drama that was concocted. So the only trick I know is to turn the like button blue or white. Just tap on it gently and you'll see the magic. Also, this video is sponsored by Weibo. So I know many of you smart investors out there have already taken advantage of the different sign-up rewards in the past 3 months. But in case you haven't, Weibo recently leveled up their game again. And from now until the 30th of September 2022, every new sign-ups will get up to $130 USD worth of Tesla shares. So I'll leave the link and instructions down below. Essentially, you just need to deposit at least 2,000 Singapore dollars and execute one buy trade of a stock or ETF and one option, and you'll get an 8% ROI from the sign-up rewards. Definitely a lot better than Alibaba. So I'm currently using Weibo for my 15,000 portfolio as well. So don't let this guaranteed deal get away. Link in the description box. Anyhow, just yesterday, it was reported by Bloomberg that the meeting between the US inspectors from the Public Company Accounting Oversight Board and the Chinese authorities was off to a tense start. So fear not, we are not filming a Korean drama right now. There wouldn't be any epic music in the background with smooth cuts in between to enunciate the tension. But it is known that both parties have their own agenda when they come to the table. So the PCAOB is basically checking if the audit work was done thoroughly, while the Chinese officials on the other hand wishes to preserve the confidentiality of certain aspects of the different audit documents. So in some cases, it's speculated that the Chinese officials have asked to black out names, addresses, and salary levels in company documents. So far, however, the redacted information has mostly been inconsequential to the overall integrity of the inspection. And this is of course based on people familiar with the matter. So let's all take it with a pinch of salt. So it is fairly interesting to note that while inspections were mandated by US laws in 2002, China had denied access on national security grounds for at least the last 20 years. And President Donald Trump was the one that brought the conversation back to the table again under the Holding Foreign Companies Accountable Act that was enacted in his last year of presidency. So the timeline is scary, while the motivations might be scarier, but who am I to comment? So Beijing flew in about 10 mostly English-speaking officials from the CSRC and the Ministry of Finance to Hong Kong, while China and the auditing firms spent significant time putting documents together. Some requests from the US officials have been so specific and older that they required those being inspected to go back to China and look for further information. So you guys know that I don't like engaging in conspiracy theories, but it does sound fairly interesting up until now. For now, we should just keep our eyes peeled. So at the end of the day, I think investors are only interested in the conclusion of this particular visit and whether these Chinese companies will be delisted from the United States exchange or not. So through this episode, I know there were many concerned individuals who were apprising and opinionating on the fact that, hey, if these Chinese companies were quote-unquote really that clean, there would be nothing to hide. And why would you prevent PCAOB from conducting their inspections? So doubling down on that fact, since many of these so-called individuals online place so much trust and faith and allegiance behind the inspection of the PCAOB, if they manage to pass this round of negotiations and the Chinese companies are officially allowed to continue listing on the US exchange, Would these individuals retract back all their statements beforehand? I doubt so. In fact, I think many of them will double down on the narrative of how all the numbers coming out from China is probably fake, and how many of these companies are frauds. So what exactly is the point? At this point, some American regulators say they doubt that their calls for more transparency will be met by Chinese businesses simply hiring US auditors. So I was slightly confused when I first saw that statement. So does it mean that in order for Chinese companies to be listed on the US exchange, they must hire US auditors? Was that the consensus? If so, then what's the point of the PCAOB inspection since they don't trust foreign auditors anyway? For now, neither the PCAOB nor SEC have said that companies can't hire a lead auditor from outside their home country. Yet, both regulators say there's little room for error with accepting Chinese or Hong Kong clients. So I guess we all want to have the cake and eat it. So if a China-based company chooses to hire an audit firm located elsewhere in the world, that firm is required to cooperate with PCAOB's inspection and investigations and produce work papers when requested, and to grant them full access. But I guess just hiring a US auditor will save you from all these troubles. Interesting. That said, there is also a possibility that China may view an auditor switch as an attempt to get around its own rules prohibiting firms from removing paperwork, which Beijing deems to contain sensitive data. So as long as the firms are still Chinese firms, it is hard to bypass the regulatory radar of Chinese regulators. So do you now understand better the bottleneck of this whole kerfuffle? I'm not here to be the judge of who is more right or who is more wrong, but when you look at it from both their perspectives, I think there are equally valid postures from both sides. However, under the hood of sensationalizing headlines from both Bloomberg and also Yahoo Finance, how tense is the exchange really? And why are efforts falling short to prevent US delisting? So I can't exactly tell. The only quote-unquote intense moment that was flashed out during the article was, I quote, "The Chinese regulators in Hong Kong are holding nightly debrief sessions, sometimes as late as midnight, to catalogue and study the materials requested by the United States to be prepared for broader audit checks down the line." So I'm sure many of you have experienced crunch periods yourself. And just a moment of silence for my brothers over in investment banking, where working past midnight is probably a norm for them. Other than that, I thought that the Chinese authorities have been rather accommodative and cooperative in trying to work out a solution around protecting grounds from both sides. Because truth be told, I was still wondering why China have yet to order all the different companies to delist from the US once and for all, since they have been rather hostile from the start. Of course, who knows what are the ulterior motives of the Chinese authorities? They could very well be putting up an act, trying to make the US look like the bad guy. But I guess only time will tell. By the way, for all of you thinking that without the US market, these Chinese listed companies will cease to exist, you might want to update your worldview a little. So as of August of 2022, the total market cap of the New York Stock Exchange is around $28.8 trillion, while the combined market cap of the Shanghai and Shenzhen Stock Exchange is around 11.5 trillion. Yes, the US market is close to 3 times as big, but without access to the US market, it probably wouldn't cripple the Chinese. Just saying. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!